Here we go again. Weekend's behind us. Monday evening, getting ready for Tuesday's trading session. Hope you guys had a great weekend. Hope you got some rest. We got a big week ahead of us. Had some nice big moves on the charts today. We get some big news coming tomorrow. We get some great trades setting up for Tuesday. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in, though, got a lot we're going to cover in a very important Monday video newsletter. Before we jump in, though, make sure you subscribe. That way you don't miss tomorrow night's video upload. And as always, if you guys enjoy the video content, hit that like button. I appreciate you guys supporting this YouTube channel and tuning in tonight. But enough of the intro, right? I'm a little bit behind schedule. Let's get ready for Tuesday. We got earnings season kicking off here this week. And boy, the markets are definitely not short on volatility for us to make some money tomorrow. Boy, what a difference a day makes. Finished the week last week firmly in the red. Nasdaq now is bullish. S&P is bullish. Nasdaq and the S&P are pretty straightforward. We got a bunch of ranges on the charts right now, which the game plan's pretty simple right now, right? Buyers would love to get breakouts going higher. Buyers would really love to buy some dips down below those lows from today. And let's not forget, we still are an overall bear market right now. And if you've been following along the last couple days, we've seen some neck breakers of reversals back and forth. So are the bears waiting overhead for some reversals overhead? I will definitely be talking about some reversals here tonight because the volatility has just been absolutely incredible. So we better be ready for everything tomorrow. Not to worry, I'm going to show you guys how to make money on the buy side and the sell side on the Nasdaq and the S&P here for tomorrow. Over on oil is bearish right now into a trading range. We have a lot of great traps and failed breakout trades I'm looking for here tomorrow. I'll tell you, the bears have a lot of opportunity. There's a lot of open space down there below that range on the oil. So bears have some great breakout opportunities, but we are still an overall bull market on crude oil. We'll talk about why I say that, and I got a couple good reversals for the bulls to look forward to tomorrow as well. We'll go into more detail on that tonight in this video. So Nasdaq's ready, S&P's ready, the oil is always ready. Before we jump in though and kind of go into each of these individual charts here and trades for tomorrow, let's all get on the same page because we do have kind of an interesting situation setting up here in the next few days here. Now, first of all, this is the third week of the month of October, so Friday is going to be OPEX. As the week gets older, the volatility, I know it's already pretty volatile right now, but the volatility should increase into Thursday and Friday as options expire. The news that we know about tomorrow, the big news, the only news tomorrow really, is that industrial production number at 9:15 Eastern time. That is a great time of day for a big news event to come out. It's right before the opening bell at 9:30, and it really opens things up for us tomorrow morning in our trade room. We also have earnings season starting this week. It began at the end of last week. This week and next week are going to be kind of the meat and potatoes of earnings season. The biggest companies will report a little bit this week, mostly next week, but I want you guys to be aware of, and I'll grab a look at this screenshot courtesy of the Earnings Whisperer. Tomorrow, of course, being Tuesday, the biggest thing you want to be aware of is that earnings are going to be posted before the open. Like tomorrow, we have Goldman Sachs before the open or after the close. In my experience, what affects us futures traders, right? S&P futures, NASDAQ futures, or QQQs, SPY. This will not likely affect the oil markets much this week, but most of the time, the biggest impact it has on us is into the end of the session. So, for example, tomorrow after the close, we got Netflix, we got Tesla. You know, if you recognize the names, that means it's probably going to be on everyone's radar. And just be aware, as we go into last hour and a half of the day for the rest of the week this week, just be careful on markets like the NASDAQ and the S&P because it may slow down as traders wait to see what those earnings are. And remember, when we talk about earnings right now, bad news is good news. Bad news is good news. Remember, every time we see good earnings, anytime we see a good news report right now, we know traders are looking at that as, well, does that mean the Fed now has to keep raising rates? So think about bad news as good news when it comes to earnings. we're going to talk a lot more about earnings later on this week. So we get some more bigger companies coming next week too. So it'll be a couple weeks here of talking about earnings, but be aware of that. Keep that on your radar. Think about the last hour and a half of the trading day. Now, big news for tomorrow, industrial production. Will we hear anything more about Europe and the energy situation, OPEC and the kind of bickering back and forth between the U.S. and OPEC right now? We've got a lot of stuff going on there that we're not seeing on the schedule here. So we definitely be keeping our eyes and ears open tomorrow morning in our trade room if we get any unexpected headlines out of OPEC, out of Russia, or really anything in between right now. Back to our charts though, because after all, the money is made on the charts, right? News is noise. News is a great catalyst, but the money is always made on those charts. Now, whether you trade one of these markets or you trade all of them like we do in our trade room, make sure you watch all the way to the end of this video because you'll learn something new throughout every different section of this video. And I try to save the best stuff towards the end of these lessons, so I'll give you a reason to stick around all the way to the finish. So grab some notes, take some screenshots. If you got questions, hit me up in the comment section below, and let's jump right in and let's kick this thing off here. I'll go NASDAQ, S&P, and we'll wrap tonight here on the crude oil. Now, real quickly, upper left-hand corner, these are all tick charts. You can see all the exact time frames in the upper left-hand corner. They will be all tick charts. And also be aware the NASDAQ or the QQQs are very similar to the S&P 500 and the SPY. So pretty much everything we talk about right now in the NASDAQ can be applied to the S&P, and the S&P can be applied to the NASDAQ. So just bear with me on that. They are a little bit repetitive. I will try my best, though, not to repeat myself too badly here tonight. There are 4 key insights that are tipping us off to where the best money-making trades are going to possibly be for tomorrow. The first one, this market may not look very bearish right now, but remember, look at a 4-hour chart, look at a daily chart right now. We are still very much a bearish overall market. That tells me, and we should, if you've been watching these markets the past few weeks, you know these rallies are very fragile right now and could easily result in some sort of reversal. So I definitely do have to keep my eyes open for short-time trades. Second big clue, second key insight is a big move higher. We saw a big move higher with that short squeeze coming out of the overnight session, and all we really got was a very shallow pullback. Anytime, we talked this last week if you recall, anytime we see a really big move going higher, we always know buyers would love to buy low. They love to buy some deep pullbacks because deep pullbacks, of course, give them a better risk-reward ratio. That's definitely something on my radar for tomorrow. The third key insight is a strong move that has now been retested. Now, why is that important? Why is it a big clue? Well, as we always say, anytime we see a strong move in one direction, we expect to get a pullback and a retest of the high, right? That's why short-term momentum is so important for us day traders. Now, what do we do now? Once we retest the high, now it's either we need to get a breakout going through the highs and we get a bunch of resistance up overhead, so it might not be as easy as the buyers want it to be. Either we get a breakout going higher, and I've got a couple different breakout patterns we'll talk about tonight on this video, or we want to get a pullback and get, for the most part, get underneath that low, right? This may turn into one bigger trading range here, and buyers will start picking off the bottoms here to buy low below that low. So very strong move higher. Buyers buy the pullback, they retest the high. Now the buyers have to show us. Do they give us a breakout going higher? We'll talk about some breakouts tonight. Or do we end up seeing it fade off that high? The key is finding that deepest part of that pullback and get underneath that area and looking for buys there. Or because of that big time bear bias, potentially that may not trigger, right? And this thing may roll over for a reversal. We'll talk about that reversal here in a moment as well. And then of course, last but not least, it's pretty much a bullish range right now. Ranges act like magnets. And so the 2 key ways you want to make money trading a bullish market into a trading range is to find a support level and buy support levels below the trading range, or you want to see a breakout going higher. And again, I got a couple of breakouts we'll talk about here tonight. So it's pretty straightforward, right? Buyers want breakouts. Buyers want to buy the dips. The sellers right now have a great shot, but they got to be careful, right? Bears have a great shot for a reversal going lower and possibly some head fakes up here as well because of that long-term bear bias. So in tonight's video here, we'll talk about the pullback, we'll talk about the breakout going higher, and we'll cover some different advanced tactics as we go deeper in this lesson. The most important thing right now is if we do pull back, right? If we do pull back, we're going to want to get again into some of these levels of support here. We know there's a range overhead. We know that range is a big old magnet. Right now, we want to simply get that pullback, get underneath some of these prior swings here, get down to support. And then what I always do is once the buyers have already retested that high, I can get pretty aggressive on that pullback before the buyers retest the high. But once they retest the high, though, now the pressure is off. That aggressive nature of the market now is kind of subsided. And now I like to be a little more patient for the entry. And to do that, it's pretty simple. I want to wait for a relatively deep pullback because, again, buyers still have not been able to get that deep pullback after that big move. I would love to get some bears coming in and see if I can't trap them in, right? See if I can't get some bears coming in and look for that short. Now, look right back here. See how the bears came in and they tried to get short off the moving average? Well, that is one of my favorite setups. It's called a failure setup. Very, very effective when you see a nice strong run higher. You trap in the bears below the 21 moving average. Now, that, again, you can be pretty aggressive on that one. On this one over here, though, I'm going to want to be a little more patient now because, again, they've already retested that high. So now what I'll do is I'll let the bears try twice. Once the bears try twice, think about now where all their stops are, and I can now use their stops because if you're a seller and you get stopped out, how do you get out? You buy your way out. The easiest money you're ever going to make in trading is running stops, right? So bull market, range above me, give me a nice strong signal candle there, right, for that nice punch as we go higher. Now, where do the buyers want to go at this point? They're going to want to go back up and take out that high, right? That's their objective now. One of my favorite follow-up trades after that failure, that two-try failure, is to find a new channel, drop backwards, right, off the high, find it down off that low, and then what I always do is look left and find a prior swing, right? Find a prior swing, try to get underneath a prior swing, and I'll look for really any of the entry patterns you guys learn in our free classes, right? So traps, failures, pullbacks. What you want to do is you want to grab that first test, right? That first test off the low of that new channel. And again, I like traps below prior swings, right? Failures above the moving average. Again, same stuff we talk about in the free trading course. Our goal now is to go back up and retest the high. Now be aware, oftentimes when markets roll lower and they kind of slingshot running higher, there could easily be some breakouts quickly coming afterwards. So make sure you keep on watching tonight because we'll talk about some breakout patterns, because if it pulls back and traps those bears in and then snaps up and runs, that's a lot of bullish momentum there for the buyers, and there's a ton of opportunity there for a breakout going higher here up to that 53, up to that 36.6, and really the big objective for the buyers there, get that big target, that big range up top there at 11,600 for the breakout going higher. We'll talk about the breakouts here in a moment. The big question I have though is what if we get a pullback? Remember, this is not a long-term bull market right now. It feels very bullish, but remember, let's not forget, last Friday, look what happened last Friday, right? Last Friday they went up, right? They retested and then dumped right back down in. Could that possibly be now coming for tomorrow? Could this be nothing more, right, than a move up, a pull back, a retest, and a dump back down? There's a very good chance it could be. And how did you make money on that last week? What was the key to making money on that big reversal last Friday? If you watched last week's videos, you were ready for it, right? It was that pop and that grind, right? That was the key to making money on the reversal last week. I'm not a big fan of picking tops, right, on a bull market into a trading range. But if I can get this thing to pull back, if the bears can come over now, and they're not going to fail this time. This time they really punch it and jump off that moving average. If I can get what I call a 1, 2, 3 reversal pattern, now where do the bears want to go? The bears have one thing now. They want to go back and take out that low. Okay, how do we get the entry on this? Very simple. Draw the channel backwards. Draw it off that low. Bring it up off that high. Bingo. Mark that prior swing, right? And then again, you want traps. You want failures, you want pullback combos, all the same entry patterns. I talk exclusively over and over again, right, in that free trading course. Which reminds me, right, I know most of you guys have taken the free course. You guys are always so great at sending me screenshots and examples of the trades you're taking, the money you're making, all off the free stuff on our website. But hey, if you're watching this video right now for the first time, if you haven't taken that free class yet, if you're one of the few who haven't learned all these entry setups I'm talking about, I'll put a link up here for you in the upper right hand corner. Grab that link, take the free course. The strategy that I teach in that free course will make it so much easier to find the best winning trades each day, help you avoid some very easy losses. It's amazing how easy it is to avoid losses if you know what you're looking for. And most importantly, the strategy that I teach, the roadmap I teach in that free course will give you a ton of confidence because you'll know what to look for each day. So if you're taking too many losses right now, if you're not making the money you want out of these markets, grab that link. Take the free course. It is perfect for someone making a jump into full-time trading. I have hundreds of examples of my best trades right in that free course. That way, the next time I get a deep pullback, the bears come in and hold and jump, you'll know what a 1, 2, 3 reversal looks like. And most importantly, you'll know when to pull the trigger, right, with the entries off the high of that channel, right? So make sure you grab that free class. You'll learn that. You're going to love that. Now, real quickly here, where is the target on this? We know the market wants to go back to retest that low, but remember that very important rule. The first leg and the third leg, right? Whenever we have reversals, that first kind of pullback leg, that first leg off the high, oftentimes is the measuring leg. The second leg is always kind of the oddball, right? Sometimes it's bigger, sometimes it's smaller. Once I see the pullback to that channel top, then I can anchor my third leg, and that will give you a much better get a finishing touch for that final target as we go lower. Another one of my favorite reversals is the pop and grind, right? And that was ultimately what happened last week, right? We had that run up, they pulled back, they blasted it, right? And they start to grind down. When they grind down like that, you draw that channel tight off that low, right? Off that high, and you sell that first test, right? That pop and grind. I got so many emails from you guys last week. Keep them coming. I love seeing you guys make money off this stuff. So if we do run lower, right? But instead of simply pulling back to that moving average and jumping like that, we begin to grind and grind and grind. These ones are very easy too. So don't chase it, right? Don't chase it. Wait for that, or should I say find that trend line, find that channel off the high. And then as I mentioned before, I always like to look left, find some prior swings, and try to get up above some prior swings there. Prior swings are where traps live. Above the moving average, buyers come in. That's where failures live. Failures into pullback combinations. You'll learn all about the stuff inside that free trading class. And again, first leg, third leg, right, will give you a really good target to fine tune that exit. Traps, failures, pullback, strength moves. You guys will love that free course. You'll learn more about that there. But that's the way you're going to look at this. If for some reason we come out and this market's like, no, we're still a bear market. See ya, back to those lows here. Now you're ready. But here's one that we talked about yet. Here's the big question, right? This market feels pretty bullish right now. Look at that ascending triangle. Look at that bull wedge. So what's a breakout look like, right? What's a breakout look like going higher? And then more importantly, what if we pull back and blast running higher, right? That could be a breakout going higher as well. Let's talk breakouts here right now on the S&P. And again, the Nasdaq and the S&P are very, very similar right now. So over on the E-mini, right? S&P 500, SPY, again, all this very much interchangeable right now. There are 4 key insights. One is the bear bias. Again, I do have to keep my eyes open for a reversal. And again, look back the last couple of weeks here. It's been a wild ride in the month of October. Definitely got to keep the bears in the back of our mind right now. Big move higher. Anytime we see a big move, right, we look for what? A deep pullback. We saw a shallow pullback today. That deep pullback tomorrow still lingering out there. We saw a strong move already get retested. To me, that tells me the pressure is off. That tells me that the aggressive nature behind this move has now been absorbed, and now it's all about buyers got to show me that breakout, or buyers have to get a deeper pullback to what? To attract more bulls into this market at a lower price. We talked about buying that pullback already. And then, of course, the bull range, right? The bull range, for the most part, not a lot is different there. It's a little bit of a more of a range-bound market. The Nasdaq had that nice ascending triangle, but still very much the same game plan. So we know how to trade this stuff on the pullback. We know how to find the pullback into a reversal. We know that already. What if we go higher here? Let's talk about some breakout patterns going higher. There are really a couple different breakouts here that you want to be ready for on both the S&P and the Nasdaq. Now, the first one is kind of the easy one, and that is the 1, 2, 3 breakout pattern. So, we pop up. We pull back to the 21 moving average. The buyers come in and they jump, right? They give us a strong blast. Now, I'm not interested in trading that first pullback. It's a range. We have lots of resistance up overhead. But if the buyers, if they can show me they want this and hold that pullback, wonderful. Now, what I'll do is I'll find a new channel off the high. I'll find a trend line off the high. I'll find a channel off that low. As always, I look left, find some prior swings, and I try to get in around the low of that channel, ideally underneath those prior swings, underneath the 21 moving average. Again, you'll learn why I do it that way in that free course. Traps, failures, pullbacks, and again, don't forget, first leg, third leg, right? That'll give you a good idea of where that best target's going to be going higher here. On the S&P, the S&P also has a range magnet overhead, which could easily lead to an easy breakout. Nasdaq has one, S&P has one as well. So first breakout is a 1, 2, 3 breakout pattern going higher. And again, keep in mind, this could go lower, then up, 1, 2, 3 like that, right? That is the same basic idea there, right? Same basic idea. It's just simply we get that dip buy, and then as it rolls higher, it holds the pullback and blast. Same basic idea there. Or the pop and grind, right? The pop and grind is my favorite out of all of them. You know why. If you watch these videos, if you do any trading in this stuff, you know the pop and grind is a great pattern. It pops up, it begins to grind and grind and grind. Easy trades here. Find that trend line, find that channel. And I know this seems kind of backwards. I know it seems kind of wonky, right? When it's drawn like that, but this is the way you want to draw them, because what will happen is you'll get that nice juicy pullback off that hidden channel low, get below a prior swing for traps, get below the moving average for a failure into pullback combination. This stuff gets me excited right now. Just talking about it right now, I'm getting excited for that breakout. So don't forget, first leg, third leg, right? That'll give you a good idea of where that objective will be. Another one here. Big, strong. We call this 2-try breakouts, right? 2-try breakout. Strong move, right? Big move, strong move. Shallow pullback to the moving average. Higher high in price. What do we always say? Traps, baby. Traps, baby. Don't miss that trade. That's a really, really high percentage trade. The strength of the move wants to be retested. The low, right? The shallow pullback is why this thing works so well, because it creates FOMO, right? Everybody wants in on it. The higher high confirms it's not just a head fake back into that trading range. Strong move, shallow pullback, higher high in price. Traps, baby. Love those 2-try breakouts. There's a beautiful example right there, right? Strong move, shallow pullback, higher high. Traps, baby. No surprise there that buyers are looking for that entry. And then, of course, the fourth one, right? The fourth one is if we see a really big move higher. remember, if we see a gap up overnight, remember, we get some earnings coming out overnight. The world is a busy place right now. If the market squeezes again and runs higher here, what do? We go out, we find a bigger channel. We try to get back below the moving average. We try to trap in the bears below the 21 EMA. When the bears get short, thinking this is a reversal, we then use their stops as fuel because, again, anytime we see a strong move in one direction, we expect a retest. If I see a really big move higher overnight, I'm looking for a relatively deep pullback. I'll find a bigger channel, try to get underneath that moving average. And I'm going to warn you right now, that pullback off the high, that pullback is oftentimes very, very sharp. And it can be very scary. That's one of the reasons why this trade works so well. When you see a strong move, a big move like that, wait for that nice deep pullback. As I always say to you guys, right when that little voice in your head says, oh my goodness, maybe this is a reversal, bingo, that's usually when it's pulled back far enough. I want to go back up and retest that high from there. Those are usually pretty easy money trades. The key is waiting for that deep pullback, trapping in the inexperienced traders who don't know how to read momentum, and then using their stops as fuel to run this thing right back up to retest the high. Those are some breakouts. And again, remember, a lot of these breakouts in the NASDAQ and the S&P could easily begin below the range and then pop up 1, 2, 3, find that channel, right? Could easily pop up into a grinder, right? Pop and grind, right? So all these breakouts could easily begin with that move going lower first. So keep that in your mind as you go here. And boy, oh boy, like I said earlier, it's very exciting right now to think about this because we have potential for, imagine that reversal for tomorrow. This could be a very, very busy day tomorrow in our trade room. Wrapping things up here right now over on the oil. Oil is pretty straightforward. You got to bear with me tonight. We got rollover today. So this, of course, is the 12/22 contract. The one downside about oil is the monthly rollover. And oftentimes that monthly rollover can be a little bit choppy for a couple days there. So the next couple days here might be a bit lower volume. It does feel like we probably have kind of turned the corner, if you will, here on the oil or the USO. So rollover is behind us. We still have a bull bias right now. This is a bear market into a trading range. We still have that bull bias. I realize it doesn't seem like a bull market right now, but go to a 4-hour chart. And on a 4-hour chart, we always talk about strong moves, right? We saw that big, strong jump higher at the beginning of October on oil and the USO. They are still trying to retest that big October high, which I believe is that 92.63 level. Yeah, right. That's the big magnet there for the buyers. Now, obviously, right now, the buyers have some work to do right now, right? But that's the goal. The goal for the buyers is to retest that big 4-hour chart high, like I said, up around that 92 half level. Now, again, we're very bearish right now, but I have to kind of keep in mind those bulls are likely still lingering. And if you're wondering, we've been talking about the bull bias now for a few days now. We are right about teetering right now to the point where the buyers have tried a couple times to go back up and retest those highs from earlier on this month. If we don't start seeing these buyers kind of turn the corner here soon, we will have to eventually call this a bear bias again because, think about it, right? The Fed's trying to kill the economy right now, demand of oil. We heard from OPEC last week, just last week, right? OPEC, not last week, 2 weeks ago, which was what led to that big rally higher on oil. OPEC recently cut their production by 2 million barrels per day because they're no fools, right? They know the demand is not there on oil. So I'm giving these buyers a little bit more wiggle room here because they still have that big run up at the beginning of the month this month. But I'll be honest, if we keep this, again, the buyers have had a hard time getting their act together here. If they can't do it soon, I mentioned earlier, there's a lot of open space. There's a lot of open space down to that 78 level here. So the bears have a great chance right now to really put the nail in the coffin on these buyers right now, but they really have to do it here soon. And so we'll talk about the game plan on both sides of this here for tonight. It's a bear market into a trading range. And what does that tell you, right? It tells you to find levels of resistance up above and do what? And sell buyer failures, right? 90% of the trades you'll see in a range market, we wait for the price to pop up, we wait for the buyers to try, and we sell it back down again. Now, there is going to be a challenge on this one because we've got that bull bias and we've got that trend line coming up. So we'll talk about that in a moment. The bears would love to short this thing off the highs, but you know what I'm going to say, right? This could easily break out and rip back up, easily make a run back to that 88.72 level, which was, again, right, what a difference a day makes is we left off pretty much at the end of Thursday's trading session. As we go lower, the buyers, yeah, they want to buy that dip, right? The buyers would love to get some of these trend lines hit, trap in some of the bears, use the sellers' stops as fuel to run back higher. I mean, think about it. When we see major reversals are oftentimes triggered by something like this, where the market's bearish in the short term, we go into a trading range, we kick out, we fail, and then the market makes that rotation back in the opposite direction. I talked about this on the S&P and the Nasdaq. These are oftentimes very, very strong. I call them slingshot reversals or slingshot breakouts because as the bears get trapped in below, their stops get triggered, it squeezes, and that squeeze, it's like a freight train, right? You can't stop it once it gets started, and that might definitely be the big plug these buyers need kind of spark this rally here for tomorrow. So there definitely are no shortage of money making trades here. Now, let's talk about the upside and the downside here. We'll kind of wrap this thing up here tonight on some reversals. As we go higher here, what is my challenge? My challenge is there's two challenges. One is we're coming off the low. No, we're coming below that trading range. Whenever a market swings from below the range going higher, it creates a lot of momentum for the buyers. I got to be anticipating of that because we have a 4-hour right bullish bullish bias right now. I've got that trend line. So as we go higher here, really, it's not easy to find a good short. The best way to sell this thing is to use what's called a two-try trap. And that is, as we pull back to that moving average, I want the buyers to try once, I want them trying twice, and I need some sort of trap entry on this. Why a trap entry? Because I have that trend line. I need two tries because of the rotation off the low of that trading range. Think momentum for the bulls, right? And the second reason is, the big reason, the trap is required because I have that rising support trend line and I want to make sure I'm selling as high as I possibly can. So of course I can get a good risk reward ratio. If I can't, right, there won't be any other bears to take that trade with me, right? I do not want to do this. I do not want to sell into stops as we go down into that trend line, right? I do not want to be selling down here. You can see why, right? The risk is way off. The risk is here. The reward is here. It's not going to work, okay? It might work once or twice, but it's not going to be a reliable trade because you're not going to be able to get enough professionals interested in that trade, right? Remember, even a broken clock is right twice a day. We want to choose our spots wisely. So I need that trap, right? I need that trap here because that trap will give me a much better risk reward ratio. I can take a small amount of risk, much bigger amount of reward. That's a more desirable trade. The more desirable the trade is, the more reliable, the more the higher percentage that trade becomes. That's the way you sell it as we go higher. But you know what I'm going to say, right? What if we pop up here now? What if we hold that pullback to the moving average and we jump going higher? Bingo, there's your reversal. There's your breakout. Mark that high, mark that low, look left, find those swings and grab those traps, grab those failures, grab those pullbacks off that low. Same stuff we've talked about already. And keep in mind, this could easily run lower first and then get that breakout going higher. Again, we know first leg, third leg will give you a really easy way to fine tune the exit. Or let's say now they pop and they grind. Same idea, right? Same idea. Momentum now turns for the bulls. We already know we have an overall bull bias, at least for now. I'm going to mark that high. I'm going to mark that low. And you guys know how much I love these pattern setups, right? Love those types of pop and grind reversals. And again, I'm obviously keeping things pretty simple right now, but I want to find that channel. I want to buy with any of the entry patterns that we talk about in that free video course that I mentioned earlier. Traps below prior swings, failures below the moving average, right, etc., etc. If things really get cuckoo and they make a really nice strong run going higher, strong move, shallow pullback, higher high in price, yeah, traps, right? That's an easy trade as well. Just make sure you don't chase after it and get trouble buying high, right? Buy nice and low there. That's how you want to make money on it as it goes lower or as it goes higher. As we go lower, right? Now, the good news is as we go lower, the trend line here is not that big of a deal. Now, remember, we are short-term bearish right now. So if we go lower here right now, what do you want? What do you want? You want to trap in the bears, okay? Use their stops as fuel, right? Go back into the range. How do we do that though? The 2-try rule. We're going to have to be, because we are bearish in the short term, we have to respect those bears. So trap them in, right? Let them try once, let them try twice. Think about that trend line coming down and see if we can't use a 1-2 try failure pattern, which you guys will learn more about in that video course. And then think about possibly that entry off that trend line, right? Going back up into that trading range. That's the way you want to make money on it, buying off the low, right? Take out some support levels below the range, trap in the bears, use their stops as fuel, and run that sucker back up into that trading range. An easy target at this point now is other side of the range and the other side of that move, right? It's a really easy way there to make some money coming off of that low. And again, it should not be understated right now that even though we have a kind of a medium-term bull bias right now in the 4-hour chart, we still have some very big concerns about the demand for crude oil. OPEC saw it. They slashed their production. And of course, we have all that wide open space going lower here. This trading range is a big clue, right? If we take out that low, we hold that pullback, we blast going lower. You know this stuff now, right? Find that new channel and short off that, right? Short off that channel. First leg, third leg as we go. That's an easy one, right? A pop and a grind running lower, even easier. Mark that low, mark that high. You get the point here, right? I'm not going to repeat myself too much here. I'll bore you guys to death, right? So as we go lower, pop and grind, looking for that short. There are hundreds of examples of these pattern setups in that free course. You guys will love it there. We know the market has 80 down below. That's a very easy big round number. And if it really falls apart tomorrow, 78.15, 78.13 is that big monthly low down there from earlier on in the month. All right, guys, be very careful though. Be very careful. Watch that move down, right? That 1, 2, and back up. Remember, it's not enough to get a strong move down. They have to hold that pullback and blast to get that 1, 2, 3 breakout, or they have to begin to grind it through, right? Remember, a strong breakout lower is not a guaranteed breakout you can trade, right? Let those bears try a couple times, use their stops as fuel, and back up into that range. So don't fall for those head fakes around the range, on the edges of these ranges, right? Just like if it goes higher here, be careful up here, right? It's still at resistance in a bear market. Don't be too eager to grab that spike going higher. Trap in those buyers and sell it back down into that trading range. All right, guys, we've covered a lot of the bases here tonight. I'm sure I missed something. I'm sure the markets will throw us some curveball here tomorrow morning. So don't forget, tomorrow morning, 8 o'clock Eastern time. Don't miss the morning trade room. We open up 8 o'clock Eastern time. We'll trade all this stuff together. The game plan is now put together tomorrow. We'll trade the stuff together tomorrow morning at the opening bell. I'll put all the membership links. I'll put all the free course links. If you're missing too many good trades right now, if you're taking too many losses, if you're not getting the results out of these markets that you want right now, take the free course, learn the 3-step strategy, and that way you're ready for trading with us here someday soon as a member and a student in our trade room. If you have any questions, don't be afraid to call the office. I'm always here. It's always very easy to get help on live chat as well. And as always, you can always drop questions in the comment section below. All right, guys, thank you so much for watching all the way to the end. If you're still watching right now, thank you so much for settling in. You are the person I do these videos for, so thank you so much for the attention here this evening. Now get out of here, get some rest, get a good night's sleep. Tomorrow morning, we'll kick some butt tomorrow morning in our trade room. And big week ahead of us. Yeah, big week here as we go into the third week of the month of October. That's all for tonight, guys. Be well, be nice to each other, and be here tomorrow. Adios, amigos. Bye-bye for now.